Talk to me about Bitcoin and cryptocurrencies. How does that fit into all this?
Yeah, great question. So you go to slide 104. So we back tested everything that ticks in macro. If we can invest in it, or if there's some way to get exposure to it, we back tested it within the context of those grids. And right now, we're actually long Bitcoin and Ethereum in our model portfolio construction as a function of sort of being in this kind of hybrid, what we call grid zero environment, whereby each of the four grid regimes is reasonably probable over the next few months. And so understanding that Bitcoin, if you look at that back test, it sees it has 137% annualized monthly return whenever we're in inflation. That's stagflation. And so that's one of the exposures we've actually allocated to in the model portfolio construction to take advantage of the fact that, hey, the economy may actually tip into stagflation here in Q4. And if we're wrong on our views on inflation and it actually is stagflation, you're going to have some exposure to that downside risk with respect to asset markets. And so Bitcoin, Ethereum, two of the best places you can be right now as it relates to pricing against stagflation. Nat gas, uranium, those are other features in the portfolio construction as well. We're not all fully tilted into stagflation, but we certainly think crypto plays a very important role in terms of protecting investor portfolios to the upside of inflation and also to the downside in growth over the next few months.
Talk about when you're looking at it in terms of that protection to a portfolio in both of those scenarios. What is the allocation size that you're seeing? Is this like 0.5%, 1% type stuff? Is it 5, 10%, bigger, somewhere in between?
Yeah, so I've spent many a years consulting institutional investors on portfolio construction and really position sizing. That's kind of like the final frontier of investing. There's no real right way to do it. There's wrong ways to do it for sure. I think licking your finger in the air is probably the worst way to do it. But the reality is, I mean, I've tried mean variance optimization. I've tried it all. And the reality is nothing works. Nothing works ex ante. It always works ex post. And so I've gone straight with just equal weighted position sizes, but more importantly, controlling your allocation to the themes. If you do have the slide deck, if you have the slide deck, go to slide 23, you'll see sort of how we're balanced across the four different regimes and also have a decent cash position in the context of expecting a little bit more volatility in asset markets over the next kind of 2 to 3 weeks. I think earnings season could potentially be negative. We got a bunch of economic data this week that could be negative. It's PPI or CPI tomorrow, PPI Thursday, retail sales Friday, consumer confidence Friday. But it really, as you can see here, it's really just about allocating to each of the regimes. And right now we're in this hybrid grid zero portfolio construction where we're saying, hey, each of the four regimes is reasonably probable in terms of realizing that economically here in Q4, both in the US economy and also abroad. And so we don't want to be tilted too far into any one regime. If we had this conversation in November of last year, that entire freaking circle would be lime green. It's like, this is going to be the most historic inflation trade you've ever seen in your life. I was on several programs like this saying that, screaming at the top of my lungs, saying, look, Bitcoin's probably going to 100,000 by the spring. Now, we only got to 60-some thousand, but I certainly think that's probably going to 100,000 by the end of this year. And you can write me down on that. I like timestamps. But the reality is the size of each of those pie slices in the portfolio construction varies with respect to what's the actual probability of realizing that regime. And so right now the probabilities are pretty balanced. So we're pretty balanced. But the next time you have me on the program, it may be all dark blue or maybe all dark green. Who knows?
When you think about Bitcoin specifically, you said 100K by the end of the year. Is that a floor that you think will cross over, or do you think that's more of like a market top, and that's like the highest you could see it going?
No. I mean, these things. I mean, pick your duration. It's going to keep going up, right? Like we know the supply is being halved at various intervals. So it's really just about not being the guy or gal who buys the top of the chart and has to hodl that for like 3 years. That's what you got to avoid in Bitcoin, right? Like that, and so, I've been following the stock to flow analysis just like everybody else. I don't purport to be an expert in Bitcoin. I purport to be an expert in understanding how the asset actually trades with respect to its own volatility and covariance and return characteristics as a function of the economic cycle, what's happening in the economy. That's what I'm an expert on. And in terms of using that expertise, I would say, hey, look, as long as we're in this period where we could either be in Goldilocks, reflation, or stagflation, you can be in, rather each of those has a reasonably probable probability for being realized, then you're going to have positive price momentum in Bitcoin. And that's exactly what we're seeing. That's exactly what we'd expect to continue to see through year end. Ultimately, the sell signal on Bitcoin, it'll be when this sort of net liquidity dynamic really starts to inflect or at least a forward outlook for it to start to inflect lower, because what we've seen historically going back to 2017, heading into 2018, was that Bitcoin, ahead of these big market moves, tends to be a leading indicator. Obviously, Bitcoin peaked, in Q1 of last year prior to the stock market. So there is some leading characteristics with respect to Bitcoin, and partially because it's more of a pure market, right? Again, I'm certainly not a Bitcoin cheerleader. I think it's just I think of Bitcoin the same way I think of all the other. They're like kids in the portfolio construction. One kid sometimes is acting up. One kid's out there winning awards sometimes, and it switches. The reality is understanding portfolio construction and where each of these children fit in that context is really the name of the game, in my opinion.